Hello traders and welcome to another video review. Today is Wednesday, July 26th, 2023. Let's take a look at the Forex economic calendar today. It's not a secret that the most important event for today is the FOMC Fed interest rate decision and the FOMC statement and press conference. All of these events are scheduled for release at 8 o'clock p.m. and the press conference is scheduled 30 minutes later. The market participants expect the Fed to hike the interest rate from 5.25% to 5.15%. So another hike is expected by the Fed, which means that the US dollar should be about across the board. Why? Because it will be more expensive than it was before the interest rate decision. So that might be one of the reasons why the market participants should or could buy the US dollar across the board. But before we will have this kind of an event, we got another very important data from the US. Building permits are scheduled for release at 2 o'clock. New home sales are scheduled for release at 4 o'clock. And crude oil inventories are scheduled for release at 4:30. So, plenty of very important data scheduled for release on Wednesday. So, let's take a look at the technical part. And of course, we are starting with the euro dollar. Just before the Fed interest rate decision, the euro dollar hit the technical support as located at 1.1027. Dipped a little bit lower, as you can see here, to 1.1022. We got this kind of a pin bearish candle at the end of the move on a 4-hour chart, and as you can see, still the zone, the demand zone, made of the two very important technical support levels and the 61% Fibonacci retracement level of the whole up move is providing very nice support for bulls. So right now we are bouncing towards the intraday technical resistance 1.10 and 1.1070, 77, and then in case of a breakout higher, the other target is seen at 1.1119. Nevertheless, if we take a look at the 4-hour chart, we can see that we are trading below 50 and 100 periods moving average, so it might be kind of a difficult for the bulls to rally higher in one go, unless FOMC will do something completely unexpected like rate cut. Okay, and the other situation here is connected with the momentum. From the technical point of view, we got this kind of a bullish divergence between this low and this low, and the momentum, of course, on the 4-hour chart. So we should see some sort of the bounce higher, maybe even towards the second intraday technical resistance. For now, the momentum is roughly at the level of 35 points, so it's still negative, it's still weak, and there is a long road for the momentum to hit at least the level of the 50, which is the neutral level. Nevertheless, there is still plenty of the room to the upside. There is still plenty of the room to the upside on the euro dollar as well. So let's wait, let's see what the FOMC or Fed decision will be, what will be the justification of this decision, and of course the market reaction on the interest rate decision today at 8 o'clock. That's the euro dollar. Let's take a look at the US dollar index. The US dollar index 4-hour chart is looking very good right now. However, we got this kind of a doji candle at the top of the move, seen at the level of let's say 101.62. Okay, so that's the swing high from this move to the upside. Of course, we are still trading below the key technical resistance located at 101.89, but not that far away, to be honest. And the key technical support is still located at the level of 99.55. So let's place this line here so we know what is the point of reference now. How much did we retrace? Because it looks like we got the pretty good. We've made a pretty good retracement here as well. So let's say from that high to the recent low, we got covered roughly around 50% of the retracement, which is of course typical retracement made during the downtrend. So the dominant trend is still down. This is the retracement, and we should expect the trend to continue when the retracement or pullback is completed. However, if we break above the technical resistance 101.89, then of course the situation might change, because there's only 61% of the Fibonacci retracement, a little bit higher, 102.03. Okay, and then of course the next target for bulls is the swing high at 103.52. Nevertheless, the momentum hits the extremely overbought conditions. We got the bearish divergence between the price behavior and the momentum. So right now the momentum is pointing to the downside. There is still the room to the downside. There is room to the downside here. We are just like kind of a consolidating around the 100 periods moving average, but there is still room towards at least 50 periods moving average, which is 100.84. So it looks like the euro dollar might be going a little bit higher, and the US dollar index might be going a little bit lower before the Fed interest rate decision. So that's the US dollar. What is the Japanese yen, US dollar to Japanese yen doing? Again, the same situation, a very nice bounce. What is the intraday technical resistance and the bounce, the pullback or bounce or correction high? 141.96. That's the level here. Let me just take a look at the Fibonacci retracement level to show you guys how much the market retraced here. So from that high to this low, we retraced 61%. It's clear and visible here. So we got, well, we almost hit this level. If we move it, if we move it here, then we can clearly say that we almost hit the 61% of the Fibonacci retracement, which is located here. So it looks like this market is technical, and most of the markets on the lower time frames looks very technical, because we got this movement to the upside. We hit the Fibonacci retracement levels on euro dollar, on the US dollar index, on US dollar to Japanese yen, or almost hit it. Well, it depends what kind of a high we will take. If we take, for example, this high, then of course you can see it's clearly that there is no problem with hitting 61%. Nevertheless, it's clear for the market participants that we get rejected from this level. We tested 100 periods moving average, then we tested again, and we are sitting around this 100 and now almost 50 periods moving average, but the market conditions were extremely overbought already. So now the momentum is dropping, and it's currently at the level of 52 points. So we almost hit the neutral market conditions. So please keep an eye on this situation here, and that situation might last until the Fed interest rate decision is made, because it will have some influence on the US dollar to the Japanese yen as well. The main trend here is to the downside, so that's the impulsive wave correction. Maybe impulsive wave will be done. However, from the larger perspective, like daily and weekly, US dollar to the Japanese yen is still in the uptrend, and this movement down, correction and down, should be treated as the So as some sort of the internal correction to downside during the larger uptrend on the larger time frames. And let's take a look, last but not least, at the S&P 500. What is going on here? Well, the uptrend is still being produced on this index. Nothing changes here. We hit recently the level of 4,558. So that's the high from the 19th July. So the last week roughly was the high. We just tested it yesterday. Okay, so the market is still trending higher. The market is still moving higher, moving up. If we switch to daily, it's even more visible. If we switch to weekly, now there's no weekly, so okay. We have to do it on the daily only, but generally the point is that this market is trading to the upside. There is no problem whatsoever with the trend. There is no indication that this trend is about to terminate or reverse, except the fact that we hit already the extremely overbought market conditions, but we done the correction, then we hit it again, so we have the correction, now we hit it again. So is it time for the correction now? It looks like the correction is needed for the S&P 500, or it might be just a pullback towards one of the important levels, or the previous high levels. So it should be one of these levels, 4,472, or maybe the support will be provided by the level of 4,448. It all depends how deep will be the correction, how deep, how long will be the correction on the S&P 500. For now, we are trending up. Uptrend is intact, and we should expect more upside in the nearest future on the S&P 500 index. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.